Our next guest says market returns in the second half of the year are going to be challenging. Joining us now is Jason Trennert, Chairman and CEO of Strategas Research Partners, a Baird company. You're a little bit, regression to the mean, reversion to the mean, regression to the mean, big first 6 months, tougher comps coming up. You got one big toe out of the market, Jason?
Not, Joe, not really. I just think that, maybe at the end of the year, the S&P 500 getting a lot higher than 4,500 or 4,550 is just going to be tough. The first year of a bull market is always much stronger than the second year. You have earnings season coming up starting next week, which will be, by any standard, probably the best earnings season from a year-over-year comp perspective of all time. Generally, what's more important is the guidance, and it seems to me there's not going to be a lot of incentive for companies to really talk up the guidance. So I just tend to think that you're going to consolidate here a little bit until you probably have a better idea of what the fiscal situation looks like, what the fiscal package and what the taxes are going to look like, corporate taxes are going to look like in the second half of the year. So I still have a cyclical bias. I still think we're in a bull market. I just think we're going to consolidate some of our gains.
Cooperman, he always calls himself a fully invested bear. I think you're kind of like that too. You've learned to not fight this. You've learned to not fight it, but you got concerns coming out all over the place in the back of your mind, and that is fiscal, monetary, trillions here, trillions there, rising interest rates eventually, inflation, policy mistakes coming out of Washington. But you're staying just because that's the momentum is there and the money keeps coming in.
And also, Joe, I since the late 80s, a big follower of money growth. And M2 has slowed year over year to maybe 14%, but it's still up. The total stock of M2 is up 30% since the start of 2020. So it's pretty hard to fight that. And so I don't want to get too cute here. I think, as Mike Santoli mentioned in the prior segment, credit spreads are awfully tight. I would say the breadth has been a little bit weaker, despite the fact that we're hitting all-time highs. There's always a lot of things to worry about, but the thing I worry about first and foremost is liquidity, and there's still an awful lot of liquidity out in the market, which makes it very hard on the short side, and that will continue to be true. I think it seems like from a timing perspective we're due for correction, but I can't point to anything in particular that would precipitate that at the moment. So and I think also the big question, value growth. I still have more of a bias towards value in the more cyclical trades.
Shepard Smith here. Thanks for watching CNBC on YouTube.